Good morning, traders from Chicago. It's 8:01 a.m. Central Time on Monday, December 22nd, 2014. For those of you who stuck around, I know many people have already taken off for the weeks and have closed the books on the year as far as trading. This is a week to be patient and to not expect very much, and definitely not a week to stake too much of your account and go into the holidays with a painful debit. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Changing the format for these trader bites. The goal here is to keep them to 10 to 15 minutes at the most. So I will not be covering news. A quick overview of the overnight, some key news if there is any, into economic releases expected for the day or the week, depending on the context, and then a quick look at the market configuration technically with the profiles and everything else, and then shut it down so everybody can move on and prep for 15 to 20 minutes before the open. The news overnight, equity markets open higher following slight declines on Friday amid continued gains in oil prices, stability in the Russian ruble, and dovish ECB commentary from Kern. S&P 500 futures continue to trade near prior record highs. Oil producers extend Friday's gains. Oil rises for the second session after Saudi Arabia voiced confidence the prices would rebound. Not much else on deck news-wise. Looking ahead at what we have on deck today for economic releases at 9 o'clock, 30 minutes after the open, 9 Central, U.S. November existing home sales expecting 5.2 million. Also at 9, Eurozone December advanced consumer confidence 11.0 estimated. At 10:30, Treasury to sell 50 billion in 3-month and 6-month bills. At noon Central, Treasury to sell 21 billion in 2-year notes. Looking at the week ahead, what do we have for the week? We have tomorrow we have University of Michigan confidence final. We have new home sales, personal income spending, and PCE core. I believe new home sales, personal income spending, and PCE core all come out at 9 Central. On Wednesday, we have we're shifting our releases by day. We have initial and continuing claims at 7:30 in the morning. We also have crude oil and natty gas that day. In the evening, we have the Bank of Japan meeting minutes. Thursday's a holiday, and Friday's very quiet. That's all there is as far as background. Let's have a look at the technicals. So Friday, okay, so Friday we opened slightly above the prior day's high, the 2063, the high of the prior day, 2061.75. So we had a tiny little gap. If you recall Friday's YouTube, the expectation is that we would get responsive selling into the thinner portion of Friday's profile. Remember, Thursday we ran up pretty hard after hitting 2047. We had a small rotation back down towards the 44 area, and we shot pretty strongly up into the close on Friday, leaving a somewhat weak structure. You might recall I showed this market profile chart showing how we just blasted through in a strong price discovery imbalance type of formation. We had a single up here that was left behind at 2057 or so. Let's see what that is. Yeah, 2057. We had a single that was left behind from Thursday. And we went and touched it on Friday. So we had our responsive. So Hypo 1 did work. Hypo 1 was looking for responsive selling to as far down as potentially 47, but not likely. The expectation is that we would be stuck in this 2060. Remember, 2060 is that big balance zone. So 2060 comes from here. It is the most traded price in this upper balance zone. The expectation is that we would be stuck in the 2060, eventually looking for buyers to step in and potentially new highs. Remember, I had said from earlier that week that any push up into 41 and a quarter and through this 47 is likely to give us 2060. And if we build enough energy at the 2060, we're looking for new highs. Well, it did all that, and on Thursday it pushed all the way up to 2016, closed at 2060, as you can see here, and then Friday it made those new highs. But as we often see, we make new highs and we sell off pretty strong. We generally have a pretty strong rotation that day or the next day once we make new highs, and Friday was not any different. So overall, the market's basically resumed the motion of going higher. Buyers are in control. The action on Friday was pretty muted. It could have fallen back into the range and gone lower, could have gone higher, could have gone lower, could have gone higher. This is exactly what we expect for a high volume node or a point, especially a point of control. The example I use in the webinar series on my website, futurestrader71.com, the example I use for high volume nodes, these big areas of volume like you see here, more clearly shown on the microcomposite, is a golf ball, the type of energy that a golf ball would have when it bounces into the rough or the tall grass. And in areas where the market is in a low volume node, it's like a golf ball hitting a concrete pathway on a golf course. It tends to bounce very quickly back if it hits the edge, or it bounces very quickly through if it hits it flat onto the middle of the pavement or the flat point of the pavement. Same kind of thing. Once we get into a high volume node, we're likely to get tangled up. So you need to be patient and exercise play with wider stops in those areas if you do initiate in those areas. That's just been my experience. So Friday took out 2076 a quarter, and then it pushed right back down into the mid, and it actually held VWAP for the day, but it pushed right back into the mid and closed right at the mid. Friday's close at 2066.50, and that's exactly where the mid is, 2066.50. And then overnight from there, it was completely sideways over the Asian session. We experienced a small pop here on some German releases, and then on the European Open, we had a very quick push higher. If we look at what the European session brought, this is the Euro Stoxx 50. This is like the S&P of Europe with just 50 stocks representing equities from various countries in Europe and the Eurozone. You can see there's a quick pop on the open, and the market's just kind of pulled back and is trading in balance on this session in Europe, and that's basically what we mimic here in our overnight session. The profile overnight shows 121,000 traded, not very much, pretty light volume compared to 358,000 traded on Friday's overnight session. So it's very, very quiet, and so will the week be. Expected to be fairly quiet. Even with news, it's likely to be quiet. Many funds and many traders have already closed the books for the year, as I'd mentioned. So you'll see that prices are likely to slosh around a little bit. and to skip through. You might see that a lot of offers and bids being pulled, and price is able to move through several levels without too many prints, so that you have prices moving higher on Delta, not moving at all, and so on. And so it's that's what we have. That's what we have to look forward to this week. Even though the profile looks heavy and thick and so on, remember the volume is very low, and we're stuck with this. It's not really quite a P-shaped. It's almost a double distribution. It's almost a double distribution, but there is fuel to the upside, in my opinion. The market still held the higher point of control overnight. You can see we tested the point of control from Friday right at the open and moved away from it. Never came back. Never made a week low. So there's this has an upwardish skew. Going into the session today, we're opening on the higher end of the profile, out of value in range. The expectation is for responsive selling, very likely on the open. Looking for it to basically battle and stay within this range. Friday's range was 19.75 points. It's interesting how the range has been so steady. Normally what we have in as far as range is it goes up and up and it pops, and then it kind of it's not as regular as we've had. What we've had since this low is ranges that are consistently going higher and then very methodically going lower. It's not normal to see that. Same with volume going higher, volume going lower, but we also had expiration in those numbers. So you expect volume to go higher into expiration, but overall, I would expect that we will not exceed Friday's range. I expect us to be in range today. However, if we do exceed Friday's range, I would expect it to be on the upside. I don't see any reason why this market would float down. There's fairly good support below 2063, 2060 down to 2057, and so on. Just take it easy today. There's really not much to glean. I'm just gonna, because we're opening in range out of value, I do expect responsive selling here for it to sell down into the close, into the point of control. But I'm open to anything really. I'm just going to watch what happens at the open, and I use this chart to monitor volume. This chart tells me what the volume is on whatever time frame. At the moment I have it set to 5 minutes. It tells me what it is on 5 minute time frame. The yellow line is the 20-day median versus the actual, and so I will watch that to see what kind of action we're going to get. I expect that I'll have yellow lines sticking up through the volume bars throughout the day today as volume gets crushed into the holidays. I'll leave you with that. We're 15 minutes in. Good luck, and I'll catch you tomorrow morning. Take care.